I'm Motley Fool Canada Senior Analyst Nick Seipel, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing prediction markets coming to Canada through Wealthsimple Predict and how investors can actually play it and whether they should actually play it. My guest today is Motley Fool Canada Chief Investment Officer Iain Butler. Iain, thanks for joining me once again.
Great to be here, Nick. We're going to change gears a little bit from our usual stock talk.
Yeah, so as I said in the intro, Wealthsimple just announced it's bringing prediction markets to Canadian investors this summer through a new app called Wealthsimple Predict. For folks who have never touched one of these things, what is actually launching here? Why is it a big deal? And what should people take away from this news?
For sure. So on June 18th, Wealthsimple said it's beta testing a standalone app called Wealthsimple Predict. It's supposed to launch this summer, and it's going to give Canadians access to nearly 4,000 event contracts trading on Kalshi, which is the largest prediction exchange in the United States. So an event contract is a yes or no bet on a real world outcome. You buy a yes contract at, say, 70 cents, and if the event happens, it pays $1. If it doesn't, contract is worth zero and you lose everything you put in. So this kind of rhymes with the options market where you can go long, call, or put options, essentially betting on whether a stock or commodity or interest rate will go up or down over a determined period of time. So back in March, the Canadian regulator cleared Wealthsimple to offer these, making it the second dealer approved after Interactive Brokers Canada. The catch, though, is that contracts are capped at three categories: economic indicators, financial markets, and climate, with a 30-day plus settlement. No sports, no elections, which happen to be the two most popular categories in the US. Prediction markets, though, generally, they are one of the fastest growing corners of finance right now. Industry monthly trading volume went from under US $100 million a month in early 2024 to more than $13 billion a month by the end of 2025. And estimates indicate the whole space could reach more than $1 trillion in annual volume by 2030. Here's, though, the part that I think we need to underline for anyone watching. Just like going long call or put options, this is betting. It's not investing. When you buy a share of a business, you own a piece of something that can grow and compound for years. When you buy an event contract or an options contract, you're wagering on a single outcome that resolves to $1 or zero, and most contracts expire worthless. Critics, including a lot of US lawmakers, call it gambling with a brokerage app wrapped around it, and there have already been insider trading cases on the competitor Polymarket. The odds of losing your whole stake are far higher than with a normal stock.
Yeah, and so as you describe this here, we have a new opportunity to speculate on economic trends, the weather, climate, etc. Really a massively growing segment of the market. But when you point out those return profiles, probably not as attractive as your kind of traditional stock investing over time, though it may be entertaining for you. But when I see a trend like that, there's certainly opportunities to invest in the companies enabling that type of trading volume, whether that's prudent volume or not. Somebody is going to offer that to the market. But Wealthsimple is private, so is Kalshi. If I'm an investor that wants to get exposure to this story instead of being a bettor at the prediction markets casino, how might you think about doing that?
For sure. And yeah, just a remark that comes to mind as you're speaking there. I mean, the bottom line is that we humans love to gamble and speculate to our detriment, which is quite unfortunate. But yeah, like you say, somebody's going to offer it, so it might as well be Wealthsimple, for instance. And the Canadian backdoor to investing in Wealthsimple is a very old company called Power Corporation. Ticker there is POW on the Toronto Stock Exchange. Power owns about 52% of Wealthsimple through Power Financial, IGM, which is a big asset management firm, and Portage, and it valued that stake at $3.8 billion as of the end of March. So if you want Wealthsimple exposure on the Toronto Stock Exchange, Power is the way to do it. Remember, though, you're getting a lot of, again, IGM Financial. Power Corporation also owns a big stake in Great-West Life Insurance Company. So you're getting these big financial companies along with that chunk of Wealthsimple. On the US side, we mentioned Interactive Brokers above, which is a publicly traded company and a well-performing Stock Advisor Canada recommendation, I'll add. But another way to play it there in the US is through Robinhood, which is ticker HOOD. For Robinhood, prediction markets have become its fastest growing business by revenue. Its event contract revenue hit $147 million in the first quarter of 2026, and that was up 320% from a year earlier. And management said April trading volume was tracking around $3 billion, which is the second biggest month ever for that segment. So again, just to be clear, there is a big difference between playing the prediction markets and owning a company like Power Corporation or Robinhood. Owning Power or Robinhood is investing in real businesses that earn fees off this trend. Trading the contracts yourself is betting. A much higher chance of losing what you put in. On top of that, regulatory risk is real. U.S. lawmakers have floated bills to ban sports event contracts, and Kalshi made 89% of its 2025 fee revenue from sports. So a chunk of the growth story could get legislated away at the snap of a finger, basically. So for now, though, for me, I treat this as a trend, worth watching it with Power as a Canadian angle and Robinhood as the higher growth, higher risk US way to play it. Just again, do not confuse trading the contracts with investing.
Yeah, so one of the biggest financial trends in North America now coming to Canada, certainly worth keeping on your radar as an investor as this trend continues to play out and penetrate the market. All right, folks, thanks for joining us for this edition of the 5 Minute Major. Reminder, as always, if you want more stock ideas from us, click the icon in the upper right of your video screen. Hope to see you next time. Until then, Fool on.